G'day, thank you for tuning in to Nest Egg's Meet the Manager series. This is a brand new series which we've never done before. It's something which we brought to the listeners and readers and you guys out there just to understand a bit more about what's going on in volatile times, what's going on in markets around the world and Australia, of course. Over the last 12 months, in my experience of being in this space and working in this publication, I've noticed that there has been a heap of changes, so many so that we can't always keep up to date with them. But I'd like to introduce you to the man of the moment, someone who we're bringing in called Chris Andrews from Trobe Financial. Chris, thank you very much for coming in.
Thanks, David. Great to be here.
And Chris is the Senior Vice President and Chief Investment Officer for Trobe Financial. So the reason why we brought you in, Chris, is because when I sat down and I was looking at people that have been there pre-GFC, people that have been in the industry for a long time, you can count them on a few hands of people that have been in that space doing it right. And I'd like to learn a bit more about your philosophy, your ideas, and a bit more around what Trobe Financial do in terms of actually being nimble to change and adapt through these different environments in the investment world. So I think we'll just start off by introducing yourself, Chris, and a bit about what your day-to-day life is like at Trobe.
I'm Chief Investment Officer at Trobe Financial, so the thrust of my work obviously is to work with our investors across our portfolios. We've got a $2.5 billion retail credit fund that's been going since the early 1990s. So that's been a very successful investment strategy for our retail and SMSF investors. We've also then got significant mandates from the large banks both here in Australia and globally. Mm-hmm. And of course, like most non-bank lenders, we do debt capital market issuances from time to time. So that's another part of the program. All of it is focused on ensuring that the asset quality, that the portfolios that we're building are appropriate for our investors.
For sure, and changing those and moving around to be nimble in the market. That's something which we were discussing even just off air with this as well. And I think that is a really important time for, empowering self-directed investors, SMSF trustees, and having that broader conversation with them. Discussing that in terms of, Trobe being in the market for a long time. The date I think you said was
1952 we started business, so we're approaching 7 decades of consistent management. And you'd appreciate that is a significant advantage for us. We've seen cycles, we've seen these changes you're talking about. Right now, the mortgage lending industry in Australia is undergoing a bit of an evolution. We've got the Royal Commission turning a spotlight on lending practices, turning a spotlight on the way lenders are conducting themselves in the industry. Yeah. And of course, what that means for our investors in particular is an opportunity to access really high quality credit assets. So it's a really good time for investors in that segment. But as you say, a lender does really need to have that track record to understand how the market's evolving and the pressure points, the opportunities, the risks that are presenting at different points in the cycle.
You look great for being in your 70s, Chris.
Why, thank you.
And I wanted to understand and navigate where we are today as well. 2018 is something where we're looking at this as a volatile market, which we've had some fantastic stable or at least some stability within the markets until recent times over the last few years. How do you navigate that as a financial institution? How do you navigate that as someone who's managing money for Australians out there today?
At the heart of that question is the deep conviction we have in this asset class. Now, one of the features of the market in Australia today, if you take, for example, we're 10 years on from the global financial crisis. Although the stock market in Australia here has been going pretty well over the last 12 months or so, it's still nearly 10% down on its pre-GFC levels. So that's 10 years, that's permanent capital loss for those investors. So we look at that and we say that sort of volatility is not the sort of volatility that we like to have in our portfolios. So the benefits for us of this mortgage asset class, secured property credit, whatever you prefer to call it, is that it delivers that really strong capital stability, both when the economy's going well and, most importantly, when the economy's not performing so well. And that resilience, we think, is something that for us as a manager and for our investors, whether they're institutional investors, and as I said, we deal with some of the world's largest global investors, or whether we're dealing with individual mum and dad SMSF investors, for us, that capital stability, that regular income profile is something that should have a significant place in every investor's portfolio.
Sure. And it's not so much a case of, having the accolades or the credit behind it, as well as having the time, which is very important, but having the team to self-sustain that as well, and having the right people who are putting the right, shots within the business being on your side
It's absolutely critical. So the Trobe Financial, we've got over 300 staff, and we really are a deep conviction manager. We are absolutely focused on this property credit asset class, mortgages. That's what we've been doing since 1952. Mm-hmm. So that is the singular focus, if you like, of all those 300 staff. If you think about what makes a manager successful, and that's irrespective of asset class, it is rigorous asset selection, so it's having a very disciplined, very well thought out investment program, but then it's equally important to have the staff who can execute that. And if you were to compare us to a lot of managers, we understand our approach to the market is to have a very strong team. We are very strongly resourced. We take a very sort of manual, hands-on approach to our asset selection, to our asset management, to our portfolio construction. And we think what that means for our investors is we have the ability to make those, you were talking about the evolutions in the market, to make those little tweaks as and when the market's evolving to select the right opportunities for our investors.
100%. And I think going back to what we discussed earlier, or a little bit about what makes up a mortgage fund, we're looking at this as maybe a 12-month investment, right? So what does that consist of, and why would that be attractive to Nest Egg listeners out there?
What the mortgage asset class can deliver. So if you think of it first as an asset class, and then we'll focus on perhaps on La Trobe's particular approach. The mortgage asset class constitutes about 60 to 70% of the balance sheets of the big Australian banks. I mean, that straight away, that single fact tells investors something. This is an asset class that performs. We saw, indeed, during the global financial crisis, how the Australian banking sector deliberately moved back towards the residential mortgage space because they understood its resilience in times of economic difficulty. So that underpinning, if you like, from that really strong asset class, that's what gives us the depth, that's what gives us the ability to execute our investment philosophy with great confidence in its resilience across the economic cycle. So our approach, we take the 12-month term account, which is the investment that you were referring to. So that's got 1.5 billion in funds under management. And what we'd like to build into that 12-month term account is a really diversified portfolio. So it's about 50-50 residential and commercial. All the loans are low LVR loans. The maximum loan to value ratio in the portfolio is 75%. And that's really critical, because we know that property markets, they're not volatile, they're not as volatile as equity markets, but we know that property markets across the cycle do go up and do come down. So we want a really strong level of security for our investors in the event that an individual borrower does go into default. 100%.
And the amazing part of that as well is the diversification that you just touched on. So any part of a healthy portfolio is diversified. That's just the investor's sentiment, I think, that we've all agreed on.
We all learned at our grandmother's knee, right? You don't want all your eggs in one basket. So we have a highly diversified portfolio. In fact, one of our independent research ratings agencies, Zenith Investment Partners, did an analysis of the fund and described it as the most diversified portfolio of its type in Australia. We love those very granular exposures. We love small loans and having a large number of them in the portfolio. That reduces concentration risk, which is delivering the diversification that's important for investors. And it also creates a nice liquidity profile too, which is also supportive of investors' performance.
For sure. Chris, thank you so much for coming in to talk to us about this. It's very good to learn something a bit more different, which I didn't have a bit of an idea about, and I'm sure there's a lot of listeners out there which didn't really know too much about that as well. So to get a bit of a breakdown and a snapshot around that, very, very helpful indeed. Chris, thank you very much for coming in.
It's been a real pleasure, David. Thank you.
Awesome. So that concludes our first episode of Meet the Manager with Chris Andrews from La Trobe. You can find more from Chris and La Trobe in the links below. You can find them in the article that you're probably currently reading or watching this video on at the moment. And if you have any other questions, you can also reach me directly at editor@nestegg.com.au. So you can also follow me across on our social media platforms such as LinkedIn, Twitter, or Facebook. See you in the next one.